Hello and welcome to Vimeo's fourth quarter earnings. Like last quarter, this is an interactive update made using our product. We hope you click and engage in whatever way you find useful. As we navigate the current environment, we see evidence that the tailwinds for video remain strong. Over 80% of all consumer internet traffic is now video. The first video-only social platform, TikTok, has now surpassed every other app in engagement with over 1 billion monthly active users. Vimeo's thesis is that these consumer trends will translate to business and transform the way we work. We've built our platform steadily over the last few years to power this transformation. And we see validation of this strategy in our Vimeo Enterprise solution. Launched in August of 2019, Vimeo Enterprise is now over 15% of total Vimeo booking. And in Q4, it grew 59% year over year. Within that, the number of seats being used by those customers grew 119%. This growth is happening because video is often a better medium for business communication. Not just synchronous communication in the form of video calls and meetings, but asynchronous communication. Things like a recorded message from a CEO, or a marketing ad, or an internal demo or training. With distributed teams, shortened attention spans, and Gen Z now entering the workforce, video is simply a more engaging and authentic way to get critical information out there. The more nuanced, complex, and high stakes the communication, the more video trumps long emails, pages of documentation, and inefficient meetings, and the more essential Vimeo's product becomes. We experienced this last month when we held a company-wide kickoff for our 2023 strategy. More than 75% of our distributed team streamed the event live through watch parties across 6 countries, from Ukraine to Israel to Singapore. We had nearly 3,000 real-time reactions and chat messages, hundreds of votes on our polls.
We can bring humanity to distributed work. We can elevate human expression. And we can do that because of the power of video, because it's a richer, more emotional, and more human medium.
What I really believe is that this is still day one. We've talked about it a little bit, but just talk to your friends, talk to business owners, ask them how many of them actually use video effectively at work. And a very small number of them actually do.
We're going to break the silos, and we're going to connect it all together with one familiar, delightful product that gets you to value, to delightful moments very quickly.
Our vision for this core flow and these self-service customers is really a one Vimeo product. That's a unified, simplified experience that lets customers discover what Vimeo offers, jump in to get work done, and then do that work successfully.
Vimeo Enterprise is a winning solution. And the proof is not just in our growth rate of over 50%. We have a product that in 3 years has a higher NPS score than Google or Apple.
I hope that everyone is as inspired and pumped up about our future as I am, right? Wearing this suit here today, okay? Because if you are, it will take the collective will of this team with that singular vision and focus, all rowing in the same direction to accomplish our goals.
What I took away from this year, or this event, was seeing the alignment between product marketing and the go-to-market plans that PMM and Josh and others have put together to set ourselves up for these very large, very hefty growth goals.
We now serve a user base of almost 300 million users in nearly every country in the world.
So if you think about it, Vimeo Player is everywhere. Everyone talked about the fact that we have over 1 billion impressions. I truly believe that AI is the new UI. The UI will work like magic. Essentially, it'll appear when you need it, and then it'll go away when you don't need it.
The brand is just how our customers identify us. It helps them understand who we are, what we do, and most importantly, why they should care. And so really focusing on a consistent approach is going to be our major priority for marketing.
It's a doable goal, and it's going to be something that I think is going to absolutely set us up for scaled growth over time. So I'm excited for all of that.
I believe in this 1,000,000%. This year is going to be amazing for Vimeo. Let's go get it.
By unlocking video for work, we can build a more connected and productive world. That's why I'm here. That's why I would spend the rest of my career making video accessible.
And the average employee watched nearly 3 full hours of content continuously. You can just check the LinkedIn posts of our employees after to see how energized they were. This is the power of video to inform, engage, and inspire. Looking back at 2022, we started the year with an ambitious plan that was constrained by bigger hurdles than we anticipated, the biggest being a material slowdown in post-pandemic demand. Despite this, and despite plenty of things we wish we'd executed on better, we had 3 critical wins that highlight our long-term opportunity, which remains intact and I think more relevant than ever. First, we continue to scale Vimeo Enterprise, which we expect to be the biggest driver of our future growth. Vimeo Enterprise revenue grew 69% year over year in 2022, a 6 times increase from 2020. Bookings is our leading indicator of revenue, and Vimeo Enterprise bookings grew 53% in 2022, with growth accelerating in each of the past 2 quarters. Within that, Vimeo Enterprise saw average subscriber growth of 64% for the full year, indicating that businesses see the need for video and are choosing Vimeo to meet that need. Once we land these businesses, we also tend to see them expand their use of our services over time. In the fourth quarter, we saw strong and growing engagement among our Vimeo Enterprise customers, with monthly active team members growing 99% and team seats growing 119% year over year. Net revenue retention for Vimeo Enterprise was once again over 100%. Our second win in 2022 is that we gained traction among the largest enterprises, becoming the video platform of choice for some of the most recognizable brands in the world. Customers like American Airlines, Expedia, Gap, Lowe's, Rite Aid, and the Coca-Cola Company. These customers are using Vimeo to create content for their website and social media, to stream town halls and events, to share recordings of trainings and demos, and to securely host all their content in one centralized and searchable place. For example, a Fortune 500 retailer who originally signed up for Vimeo Enterprise in 2021 increased their contract size by 225% last year and is now using Vimeo to host thousands of videos across all of their brands. Third, in 2022, we improved the efficiency of how we operate. This included adjusting our headcount, streamlining marketing spend, and choosing fewer, more targeted, and more impactful investments. As a result, we were able to deliver better than planned positive adjusted EBITDA and free cash flow for the last 2 quarters. More importantly, we're raising the bar for a good investment at Vimeo and setting ourselves up for sustainable profitability and margin improvement going forward. We also improved our efficiency while continuing to build innovative new products. Take, for example, interactive video, which you're experiencing right now. Think about how powerful it will be in the future for every new hire to be trained on the job with interactive video versus a training manual, or for every marketing message to have an instant feedback loop and ability to buy. This is a capability that did not exist in the market at scale before Vimeo. We're proving that we can exercise cost discipline while innovating, and we're committed to executing that balance consistently in the future. Looking forward, I'll sum up our 2023 strategy in 3 words: innovation through simplicity. Vimeo has built an incredible suite of products and a massive user base. We have a lot of power under the hood, and our task is now to expose that power in a viral and scalable way through our product, our website, our sales force, and our brand. So in 2023, innovation will come not from launching a bunch of new features, but from making the tools we have easier to discover and use. Innovation will come from simplifying video and simplifying Vimeo. First, we will focus and obsess on 2 goals: get self-serve back to growth and sustain momentum on Vimeo Enterprise. With self-serve, we're focused on reinvigorating top-of-funnel demand by better attracting businesses and better engaging and converting the businesses who are already coming to us for free. Our conversion of free to paid customers is lower than best-in-class SaaS companies, and we believe we can get to best-in-class by making foundational improvements in our website, pricing, and product experience. With Vimeo Enterprise, we're focused on continuing to increase awareness of our offering, win deals, and expand organically within the largest companies. In particular, we're doubling down on 2 use cases where we see the most traction: marketing and employee comms. Marketing is about helping businesses create and share videos to reach and engage their customers. This includes videos for social media or your website, as well as hosting webinars and events. Employee comms is about using video to inform, motivate, and connect with distributed teams. This includes recording video demos and messages instead of holding a meeting, training your sales force using interactive content, and live streaming town halls. These 2 use cases made up over 60% of the Vimeo Enterprise pipeline generated in the second half of 2022, more than double the dollar amount from the same period last year. And they lend themselves to natural expansion into other use cases and departments in the future, from customer support to sales to R&D. Next, we will orient the majority of our 2023 roadmap to unify our current product suite. We've already built what I believe is the strongest suite of video capabilities in the market, but many of our products are presented to users today as disparate experiences. For example, today we have one mobile app to create videos and a separate mobile app to manage and publish those videos. This leads to unnecessary friction and makes it harder for users to discover and adopt the full breadth of our offering. In 2023, we will be deprecating legacy products and reducing the redundancies and friction in our users' experience so they can use Vimeo as a single interface to do anything with video. Finally, we will continue to both streamline our investments and improve our value proposition for our target customers. We did this effectively in 2022 and are well positioned to do the same in 2023. I'm tremendously excited about the value we will unlock by simplifying Vimeo. We are simplifying our platform, our marketing, our operations, even our disclosures. I believe that making Vimeo a more focused and unified company will unlock growth and value for our customers and our shareholders. It's also important to recognize that 2023 is a transitional year for us. Still very early days in terms of where video communication can go, particularly in the business world. And I'm confident that Vimeo's platform and products can be part of facilitating this evolution. So while we're expecting to generate positive adjusted EBITDA in 2023, we're also making a conscious choice to invest in getting back to growth rather than maximize near-term profitability. We see plenty of inherent profitability in our current business. With gross margins in the high 70% range, we have the flexibility to adjust our model to produce double-digit EBITDA margins. But we believe that making disciplined investments in self-serve and Vimeo Enterprise now is the right path to achieve both double-digit revenue growth and double-digit EBITDA margins in the future. This is a choice predicated on our view that post-pandemic demand is obscuring the normalized growth trends for self-serve and supported by the macro tailwinds in video. We will execute on some basic fundamentals in the next few quarters to validate this view, and we'll continue to reassess and raise the bar for every investment as the year progresses. As we sit here 2 months into the year, we have every reason to believe this choice is the right one. We have an innovative set of products that can uniquely serve a growing need for more modern human communication. And we have a focused strategy that is self-funded and based on 18 years of serving millions of customers with video. Finally, we have the vision, drive, and experienced management team in place to execute. Thank you again for joining today.
Welcome to the financial section of our Q4 investor update. We have lots to cover today, including our Q4 and 2022 results, some important investor relations disclosure changes, and our Q1 and 2023 outlook. As this is an interactive video, you can jump to results, disclosure changes, or outlook by clicking on these buttons. Just a reminder, all the financial metrics I talk through, except for revenue, will be discussed in non-GAAP terms, unless noted otherwise. Q4 revenue was $105.6 million, down 1% year over year, though on a constant currency basis would have been up 2%. GAAP net loss was $5 million, and we delivered an adjusted EBITDA profit of $6.5 million. We generated $2 million of free cash flow in Q4 and ended with a cash balance of $274 million. For the full year 2022, revenue was $433 million, up 11% year over year. GAAP net loss was $80 million, and our adjusted EBITDA loss was $8 million. Now, turning to our investor relations program, we're enacting some changes starting with this release. First, and perhaps the biggest change in 2023, is that we are adjusting our disclosed revenue splits. I'll spend a little more time than I usually do on walking through the details of our product lines on this call. If you'd like to skip forward to our financials, please feel free to skip ahead. While we had previously grouped our revenue by whether it was generated through a self-serve or sales-assisted motion, we will now report along the following categories: self-serve and add-ons, Vimeo Enterprise, and other. This is better aligned with how we have organized and focused internally in 2023 and will help us more clearly delineate between revenue from our different strategic investment priorities. Diving into each category. Self-serve and add-ons includes the revenue generated from subscription tiers sold directly on our website and any add-ons tied to those subscriptions. These subscription tiers range from starter to standard to advanced and let customers create, edit, host, and manage and share videos with the ability to add on additional bandwidth over a certain cap. We have 1.5 million paying self-serve and add-on subscribers, including everyone from consumers to video pros to SMBs and large corporate clients. This category is our biggest revenue stream at 70% of 2022 revenue, with ARPU of around $200. Aside from being a major driver of Vimeo's scale, we believe this part of the business will continue to generate profits that can sustainably fund our future growth, particularly in Vimeo Enterprise. This is also a key hunting ground for larger enterprise deals, as high usage in this category is often a strong signal of potential to upgrade and expand the use of our platform. In fact, in 2022, more than 60% of new Vimeo Enterprise clients migrated from self-serve. Vimeo Enterprise will now be reported on its own, exiting the year at around 10% of revenue and over 15% of bookings. It is our fastest growing product and the key focus of our strategic investments. Vimeo Enterprise is sold through our sales force and includes the same capabilities of our self-serve and add-on, plus enterprise-grade features such as advanced security, custom user permissions, single sign-on for employees, interactive video, and marketing software integrations. ARPU here rises to an average of around $20,000, with a range of deal sizes that can reach up to 7 figures. Going forward, we expect Vimeo Enterprise to grow steadily as a percentage of our bookings and revenue. Finally, we are combining our other products and legacy acquired businesses into one line that will now be reported as Other. Other currently makes up around 20% of total revenue, with that percentage expected to decline over time. About 60% of this revenue comes from OTT, our make-your-own streaming app solution. Also included in this group are legacy products that were previously acquired for technology and talent that have since been integrated into the Vimeo platform. Here, our focus is continuing to capture value from remaining customers and efficiently acquiring new customers without significant incremental investment. Second, to add further transparency to our disclosures, we will be reporting bookings, subscribers, and ARPU for each of these new categories, which should give more clarity to the underlying drivers of revenue, including the important leading indicator of bookings. We believe we can provide more clarity into our business through greater transparency. For historical context, we are providing data back to 1Q 2020 for all of these items. You can find them here. And finally, we are going to stop reporting monthly metrics in 2023. We believe that our updated quarterly disclosures provide a considerable amount of incremental transparency into the business, with a particular focus on forward-looking metrics with bookings. This will provide a more helpful view for investors than monthly reporting. Now moving on to the quarter. We will focus on Q4 in this call and have provided full year financials in our disclosures and in a sub-video here. Q4 bookings were up 2% year over year, a sequential improvement in growth rate driven by increases in bookings growth rates in all three product categories versus Q3. Vimeo Enterprise bookings grew 59% to 16% of our total Q4 bookings and showed strong underlying metrics. Subscribers grew 38%, monthly active team users grew almost 100%, filled seats grew 119% year over year, and NRR was once again over 100%. It was also our best Vimeo Enterprise win rate of 2022 in Q4. Self-serve and add-ons bookings were down 5% year over year in the quarter and represented 67% of our total bookings. Top of the funnel demand remains a challenge post-pandemic, and we are focused on the fundamentals of our marketing, product, website, and pricing to get this revenue line back to growth. While in the meantime, it will continue to serve as a feeder for enterprise. Other bookings were down 3% in Q4. OTT benefited from a large customer renewal and showed growth offset by ongoing wind downs in other products. Moving over to revenue. Q4 revenue was down 1% year over year, though on a constant currency basis, it would have been up 2%. Vimeo Enterprise grew 35% year over year to 10% of revenue. This was driven by subscriber growth of 38%, partially offset by a small decrease in ARPU of 5% due to mix in the quarter. Self-serve and add-ons revenue was down 2%, with ending subs down 3% year over year to 1.5 million and a 1% decrease in ARPU, following the bookings trends we've seen over the last couple of quarters. Other, which was 20% of revenue, was down 8%. Solid gross margin management enabled us to post a gross margin of 77% and grow gross profit dollars 2% year over year to $81 million, even as overall revenue declined. Of the $14 million swing in adjusted EBITDA year over year, improving gross margin contributed almost $2 million of incremental dollars. We continue to gain efficiency with our operating expenses. We were able to reduce operating expenses 14% year over year, with savings in all three categories. Compensation was roughly flat year over year on a 1% increase in headcount, and non-comp expenses were down meaningfully year over year. Sales and marketing spend fell 10% year over year to 35% of revenue, largely due to a focus on getting a lot more efficiency from our paid marketing spend. R&D was down 14% year over year to 21% of revenue due to a reduction in compensation-related expense, as well as savings from more efficient hardware and software spend. G&A was down 25% year over year to 15% of revenue. In G&A, we did see some increase in compensation costs year over year to the addition of new executives, but other savings, such as lower bad debt expense, more than offset those increases. Adjusted EBITDA profit of $6.5 million in the quarter did have some benefits that may not be repeated in upcoming quarters, including a lower bonus payout given last year's performance, lower bad debt, which we expect has now bottomed, and several other smaller items. Altogether, these comprise roughly half of our EBITDA profit for the quarter. Finally, on a GAAP basis, a couple items to note. D&A, interest, and tax together were essentially net neutral in the quarter. Stock-based compensation was $12.1 million, down 16% year over year and down 38% quarter over quarter. This was due to credits related to modifications made to certain outgoing employee grants. Excluding these, our stock-based compensation has recently been running in the $20 million a quarter range. We expect that to be a peak level, and that quarterly stock-based compensation should start to trend down, as our goal is to actively manage the impact of employee grants on net dilution at the company. On a related note, we have moved to net settling most equity as it vests, utilizing cash to settle tax liability for our team versus issuing additional equity. This is basically a form of a buyback, and we believe it to be a good use of our cash given our healthy balance sheet. Moving on to our outlook. 2023 will be a pivotal year for Vimeo. It's worth noting some important progress that we think will shine through in the numbers. Number one, we expect to continue to grow Vimeo Enterprise at an exciting rate. Number two, in a challenging environment, we plan to swing full-year EBITDA from a loss to a profit as we drive efficiency in our business. And three, we expect that we will demonstrate the potential of self-serving add-ons for profitable, long-term growth. For 2023, we are expecting a mid-single-digit % decline in revenue. There are headwinds and tailwinds driving this. On the headwind side, our revenue is driven by bookings, typically with a 2 to 3 quarter lag. The bookings declines we experienced in 2022 will materialize in our P&L in 2023. In addition, due to our planned wind down of certain products and other, and ongoing top-of-the-funnel pressure in self-serve and add-ons, we expect overall bookings impact, particularly in the first half, will impact revenue as well. That said, in the second half, we believe we'll see signs that our growth strategy is working. Our fundamental work on self-serve should start to be more apparent in those bookings, and paired with continued momentum of Vimeo Enterprise, our tailwind should start to emerge. As for expenses, we expect continued efficiency across all of our spending in 2023. Gross margin should be flat to slightly up thanks to a focus on efficiency. On the operating expense side, we executed a RIF in Q1, which will start to show through in the financials more fully in Q2. There'll be some offset early in the year from resetting our bonus in 23 and the fact that not all exiting employees left immediately. As it relates to our non-compensation expenses, we will continue to manage them with an eye to gaining efficiency across the board. As Anjali mentioned, a continued investment in our B2B offering is embedded in this guidance. Putting it all together, we have a clear path to adjusted EBITDA profit in 2023, and we believe you should model it at $5 to $10 million, with higher profits later in the year than earlier. As for Q1, in Q1, we currently expect revenue of at least $100 million and to post adjusted EBITDA of around break-even, mainly due to the timing of factors related to the phasing in of cost reductions I mentioned before. One note on our balance sheet, our bonus payout timing typically causes Q1 cash to decline, and that's our expectation for Q1 2023. Vimeo's financial strategy is to keep sharpening our balance of being efficient and driving profits in a tough macro environment while we invest to grow. We'll measure our progress transparently in continued bookings momentum for Vimeo Enterprise and a bookings turnaround in self-serve and add-ons. As Anjali said, there is near-term profitability inherent in our model, and we have the flexibility to adjust our investments to get meaningfully more profitable if the growth we are looking for does not materialize. These options aside, our team is committed to making smart investments that we believe will set us up for sustained growth and profitability for years to come. The tailwinds for video remain strong, and we feel we are very well positioned to deliver strong returns in our market. Thank you for your attention, and we hope to see you for Q&A.